Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Malaskis. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to the podcast. I'm your host, Tim, and today I have part two with my friend Zo here. We are going to talk more about the growth-minded business owner. So not just specific to real estate. If you watched our last episode, it was very specifically geared toward real estate agents. This is more about other businesses. It still can apply to real estate.
Yeah.
But it's how do I grow and how do I know when that time is? How do I do it appropriately? How do I allocate funds? That sort of thing. So if that's what you're in for, that's what you're going to get.
Love it.
All right, so let's kind of recap a little bit about what we talked about in the last episode. Okay. Specifically, how do you know when it's time to grow? How do you know what steps you need to hit, what milestones you need to make before you get into that next level?
Yeah, so when you're trying to grow, let's say even if you are a realtor and you're trying to grow your team, right? Anytime you're trying to bring on new people, you need to think of these three things. You need to think of what is the goal? What is my capacity, and then what is my ability?
Yeah.
And what I mean by that is your goal is, why is this person, do I need to hire this person? Because you can want to hire somebody because it can free you up to gain more revenue, maybe more time, or you can hire somebody to relieve you of certain stresses. Either way, there's no bad decision, but know why, because why will tell you what you need to do next after you actually hire them. The next thing is your capacity, and that's really, am I at my limit of multitasking? Am I at the point where I cannot be in two places at one time, but I need to be in two places at one time? That's a pretty good indicator that, okay, we need to start thinking about bringing on new people and growing in that way. And then the third thing is your ability, and this is really a function of your profitability and your cash. Your profits, my question is, have we been profitable? Are we currently profitable? And that's important because profits tell you whether or not your decisions in the past have actually turned out to be good.
Right.
Yeah. Profit is kind of a lag number, right? You don't actually know how profitable you are until the deal is done, until the expense is expense. And then you pair that alongside with your cash. What is my cash position? In our industry, we say cash is king. Yeah. So if you have cash, that tells you I actually can do the thing I want to do. Yeah. Right? And then you think about your cash flow. Can I keep it going, and will we be net cash positive if I bring on this new person? Because ultimately, if you're net cash positive, that it could be a good decision for you.
That makes sense. Okay, so as a business owner, and I want to grow, are there any metrics? Are there like 2 or 3 or 4 metrics that I should be looking at to decide whether now is the right time, or do I need to hold off for a little bit longer?
So, you want to look at it at different times in your business, or different times of the year. You're going to be looking at different metrics. Okay. So I'll give you weekly, and then I'll give you monthly. So on a weekly standpoint, you should be monitoring what is your cash balance. Super important, right? No cash, no business.
Yep.
So you need to be monitoring your cash balance. Secondly, I'm going to group these two. It's called accounts receivable and accounts payable. Okay. What that means is that how much accounts receivable, how much money is out on the streets, invoices that are out there that I have not collected on, and how long have they been out there? Okay. Accounts payable is the direct opposite. How much money do I have to pay someone that I haven't actually paid, but I have their invoice on my table, their bill? Right. When you know those two numbers along with your cash balance, you have a better picture of the short-term capacity of your cash.
Okay.
Right? So those are 3 things from a weekly standpoint. Once you start thinking about monthly, and at this point, I'm hoping you might have the bookkeeper helping you to put together these financials. Yeah. You're gonna be looking at your gross margin. So that's what we call it gross margin, but what you can define it as is, what is my gross profit after I've spent all of the expenses I can't avoid to earn the revenue. Right. So if I'm getting commissions, are there, brokerage fees? Are there other fees that come out of my top line?
Yes.
Those are automatic expenses you cannot avoid. So what is my gross margin? Am I maintaining a healthy margin? And that's before you start doing all of your other operating expenses. And then on a monthly basis, you're monitoring your cash flow forecast. So we talked about net cash each month.
Yeah.
Either your net cash can be going up or net cash could be going down. If it's going down, you need to know how long it's going to take until you get to zero. Super important.
Yeah.
Again, no cash, no business.
Right. Man.
Yeah.
That's depressing.
No, I like to keep it up because
Yeah.
then I can, instead of tracking when it goes to zero,
Yeah.
I say tracking to my next goal.
Right. And you just keep setting new goals, right?
Yeah.
Just keep hitting those goals. That's
Yeah.
awesome. All right. So you offer a lot of services.
Sure.
So why don't you walk us through a couple of the things that you offer and who would benefit the most from each of those services?
Yeah. So as I said, let me reintroduce who I am. So I'm
Yeah.
Zo, right?
Yeah, absolutely.
I own Zokpia Accounting and Consulting. It's in the name, accounting and consulting, but more specifically so that it's clear, we do business financial services, which is kind of an umbrella term in that we help businesses with fractional CFO and controllership work,
Okay.
CPA, tax services, and then also bookkeeping and even some financial statement audits. So we know our way around a set of financial statements very well, and we kind of pair that with individual tax prep. So you might have your realtors who still file just personal returns. They also can be our clients as well.
Gotcha.
And so we kind of umbrella term all things financial.
Okay.
Yeah.
All right. And are you accepting new clients right now?
All the time. Honestly, people come to us at every time of the year.
Yeah.
Right. Not just the end of the year.
I was going to say, yeah, exactly. But those are the busier times of year for you, right? Like
They are.
Just like
Yes.
every other accounting firm out there, you get busier as taxes become
For
due.
sure.
Yeah.
And I actually want to use this as an opportunity to answer one of the questions we get all the time.
Yeah.
Which is, what's the difference between the bookkeeper, the CPA, and the CFO?
Oh, absolutely.
Super important,
Absolutely it is.
right? Because not sometimes, all the time, when you walk into a CPA's office, the term CPA can be broad, and you may not know where they might actually specialize in.
Okay.
Right? So when we think about bookkeepers, which all business owners need, you need a bookkeeper, whether you are the bookkeeper yourself or you hire out. And that's just going to be someone who's going to help you with the data entry, making sure that you're reconciled every single month, categorized every single week or month, however you want to do it. They're on top of it. They usually are not directing how your financials ought to look. So they're usually taking direction either from you or whoever your financial person is.
Okay.
Second, above that bookkeeper is going to be your CPA. CPAs typically are focused on taxes and compliance, and that's great. They're your first door into strategy, thinking about the future of your business. But when you walk into a CPA, you might be looking for additional things. Some CPAs don't do bookkeeping.
Okay.
Some CPAs can do bookkeeping.
Right.
But many CPAs do a light sprinkle of bookkeeping, but mostly taxes.
Yeah.
But there becomes a certain point when you grow that there's a lot of moving parts, so much things are moving along that it's like, okay, you might be looking for more than your CPA is willing to do.
Right.
Because they got into it to just do taxes.
Right.
That's when you start venturing to the world of CFO / controllers. Those are people who are going to focus primarily on strategy and resource management, right? And you might be touching or starting those conversations once you're around 800,000, $1 million annually. Those when that starts to become critical, because sometimes your bookkeeper is not going to help you divide gross margin across all your properties.
Right.
They're going to say, that's your job. That's your job.
Okay. All right. And those are all the services that you offer.
Well, yeah, unless sometimes when we're dealing with it depends on a lot. Sometimes when we're dealing with transactions, let's say you're doing M&A transactions, or your lender needs a bit more from you, we do financial statement audits.
Yeah.
So we're typically doing that for nonprofits or even for-profits that have government funding.
Okay.
Right. They may need a financial statement audit. All that means is that we're going to attest or just say these financials are trustworthy reasonably, so that you can get approved for whatever financing or whatever source of revenue that is.
Okay.
Yeah.
And you just mentioned M&A. So you do mergers and acquisitions, or you help companies do that, correct?
Inherently, yes, because your financials have to be attractive.
Yeah.
Not creatively attractive.
Right.
Everything is real.
Accurately
attractive. They have to be attractive so that an investor would actually be willing to, to buy or
Right.
or even for you to have the capacity to prove to a lender that you can absorb a business if you wanted to purchase a business.
Yeah.
So yeah, we think about that because the end life of a business is either sell, pass to next of kin, or buy.
Right. Yeah. Interesting. Okay. Yeah. Those are all, I think, imperative services, right? Like those are all things that people need, whether they know that they need it or not.
Yeah. Or they eventually get to it and they're like, whoa, I need this.
Yeah. Let me ask you this then, because that begs the question, like, you don't want it to get too late.
Yeah.
Before you realize, oh shoot, I need this service.
Yeah.
How do you know? Like, how would somebody out there watching right now know that they should be reaching out to you for whether it's bookkeeping or CPA or fractional CFO services? What's the bar there?
So there's two bars. One is, are you sleeping not peacefully and your brain is just constant? Are you in spreadsheets all the time?
Yeah.
Are you not able to do this quickly enough so that you can just get to the decision? Right. That's one marker. Two is does your growth or your revenue sustain? There's your team size. We typically find that around 800K annually to maybe $1 million, because our clients range from 800 to 10 million annually.
Okay.
Right. At least our CFO clients.
Yeah.
Prior to that, their bookkeeping, we like to keep it so that our services are right sized for you, because you can get away with the bookkeeper from like 300K up until you get into that 800 million mark.
Yeah.
But beyond that, you need somebody to fully kind of take over a lot of that stress. And we do it in a unique way because we have the capacity to basically take all of your financial stuff.
Okay.
So that means we pay bills, we collect invoices, we pay off your debts, we manage your cash, while also providing you strategies on a regular basis. We're talking like, hey, you can't actually hire that person. Hey, you probably could. And so we're helping you get to your goals in that way. So I think that's a good indicator.
Yeah, I mean that's a very comprehensive like role that you play with these businesses, with your clients.
Yeah, because it's a gap in the market. At least that's what we see it. Like sometimes when you're in that 1 to 10 million, in reality, you're too big for just a bookkeeper or even just a CPA, because they may just, like I said, light sprinkle bookkeeping, right? And sometimes you're too small at that same time. You're too small for like a more traditional full-time CFO role. So that's where it's like we need fractional professionals who can give you, all of the expertise of an executive for a fraction of the time and fraction of the cost.
Yeah. Wow. That's a lot to think about. I think that's awesome. It's a really nice like suite of services that you offer that, again, like you said, there's like a hole in the market for that, like a void that's not there. But no, so I really appreciate you coming on today.
Likewise.
Thanks for all of your insight. Remember, keep learning, always be educated.
And cash is king.
And cash is king. That is right. All right. Thanks for joining in, and we'll see you next time, guys. Bye.